think it's working. Hello, hello, hello. What's going on, YouTube world? Can you guys hear me loud and clear in the chat over there? You can't hear me? Okay, nice. All right, everybody. Welcome to a Capital Hungry Market Update and Trade Ideas webinar. I'm going to be going over key fundamental impacting factors to the market, both reactive and pre-planned, what economic data we have, market sentiment, analysis and trade ideas across gold, GJ, GBPUSD, EURUSD, USDCAD, and US30 stock market index. It looks like the audio and visual is good and the latency is good, so I might as well just jump straight into it. Now, in terms of key fundamental points, we do have some war tensions, which so far are currently just noise and distractions. For example, we have Joe Biden all the way in Ukraine again. We have a Chinese diplomat in Russia. We have NATO escalating tensions, calling Russia and China the aggressor. We have China and Russia calling the West the aggressor, and vice versa. So you do have to keep an eye out on your news headlines, as it feels like war tensions can pop off at any minute. And so far, we're getting flooded with a lot of political disputes and verbal disputes. No market impact yet, but something to keep an eye on. The main thing that we've been looking to play is dollar domination. Dollar domination is the narrative we coined in Capital Hungry, which is basically the market further pricing in more tightening of financial conditions by the Federal Reserve. Anytime we have continued higher inflation, stronger economic data on the US side, this shows that the Feds will continue their fight on bringing inflation down, keeping interest rates up, even doing more rate hikes, and tightening financial conditions further. This leads to dollar strength, gold bears, and stock market bears. As we've had over the last few weeks, very optimistic labor market reporting, stronger economic data with retail sales activity, higher inflation figures, hawkish Fed speakers, and even stronger PMI today, you can see that dollar strength is holding the most weight. We still are looking to play gold bears, stock market bears, GU bears, Euro USD bears, and USDCAD bulls. That's the main sentiment in understanding the fundamentals that are impacting the dollar and what we have had so far. Of course, we want to look at what economic events we have into play, but we will talk about that in a minute. This week, the main focus points for US dollar, dollar pairs, gold, and equities is the Fed meeting minutes, PCE, and GDP data. Now, in terms of market sentiment, for the following reasons that were already stated, we've been playing dollar bullish bias, both fundamentally and technically. Japanese yen has been more bearish. Overall, improving economic data is keeping less demand in the Japanese yen as a safe haven currency, coupled with the fact that the Bank of Japan is still keeping interest rates in the negative in a very ultra-loose monetary policy. This is keeping the Japanese yen more bearish, and we still are looking to extend GJ buys. We've been playing GJ buys for an extended period of time now, and are finally starting to get a break out of that intraday range and want to extend that further. Other aspects of market sentiment in the example of US equities and global equities are starting to turn more bearish. We have markets more on edge with geopolitical tensions starting to rise. We have a lot of the Fed pivot narrative faded out and not holding much more weight, and global inflation levels still very elevated, which is showing that majority of central banks are going to continue tightening financial conditions, which is the opposite of what greedy stock market buyers want. So we're still looking to play stock market bears, Japanese yen individually bears, which means more GJ buys, and US dollar individually bulls, which means more GU Euro USD sells, and in correlation, the tightening of financial conditions by the Fed being further priced into the market means more gold sells as well. When we're coming to look at market sentiment here across the board, you can see on the dollar, Ever since we had extremely optimistic labor market reporting, the bounce we had around the 100.8 key level is a retest of previous historical highs in very key buyer demand zone that's been highlighted in previous webinars. Since then, we've had much stronger bullish price action with fundamental catalysts supporting that, such as, of course, optimistic labor market reporting, increasing inflation, healthy retail sales, and strong PMI figures. As long as, from a technical perspective, don't mind the trend line, as long as dollar is still holding above the 103 handle or just continues bullish throughout the next coming sessions, we are still looking to play dollar bulls. We don't really have any fundamental catalyst to be jumping back into dollar bears, but there's one thing that we have to note, okay? Understanding market psychology, the dollar domination narrative of the central banks, mainly the Federal Reserve, further tightening financial conditions, this goes against what the greedy stock market buyers want. So even though we may see stock market bears come into play, dollar bulls come into play, it's going to be a lot slower and a lot more steady price action with more aggressive waves on the intraday period compared to when the stock market is just surging bullish, right? Let me give you a quick example of that. And I've talked about this millions of times before. So you can see the night and day difference when the stock market here was in a bullish fundamental sentiment with interest rates still very low, Feds pumping money into the markets, whales riding that wave, with very short-lived pullbacks and continuations to the upside all the way until the Fed started to shift their monetary policy and tighten financial conditions. Look at the night and day difference between the bear market that we have been playing and that we are still playing. Every single dip in the bear market due to stock market greed and hopes of a reversal, you see these very aggressive what's called bear market rallies and dead cat bounces. Even for the new year, we anticipated we could come up to 34K and still see potential exhaustion and the bears come back into play. So even though we want to play dollar domination, even though we want to play stock market bears and gold bears, it's a lot more difficult in terms of the price anatomy and market structure. But it is what it is. That's what we're going to be adapting to accordingly. It's the exact same way we were playing this bear market for almost more than 9 months here, playing the pullback waves and playing the downside waves as well, as long as we can't break above the current price points of 34K. But in terms of market sentiment, I still want to play the dollar upside. Yen is still individually bearish, rejecting key sell side liquidity zones. Nice intraday double top and more bears in play, obviously on the ultra loose monetary policy of the Bank of Japan. And what's also giving us more signals of some stock market bears and shorts is volatility index doing two things. One, still respecting 18.6, very key buyer demand zone, and also two, starting to get a breakout above the 22 price handle. This shows us that just today, we saw more buyers exiting positions out of the stock market, obviously as we went bearish, but not just that, a lot more short sellers starting to enter the market as well. So we can see that as global equities, not just the US, are starting to show some signs of exhaustion, failing to break into new highs, breaking below range lows, starting to turn a lot more bearish across global equity market regions here. Okay? Now, before we jump into our individual technical and fundamental analysis on the pairs and give out trade ideas, we just want to understand what key events we have in focus, obviously for the rest of the week, but more importantly, into the Asian session, London, and New York tomorrow. So let's do that before we jump into the trade ideas, as that data can potentially impact our expectations and analysis. So just a quick recap, we had still strong US PMI figures and very strong UK PMI figures overnight. This is why when we had very strong UK PMI figures, GJ on top of a weaker yen finally broke out of this range and continued our bullish bias. But GBPUSD just had a short-lived pullback against a stronger dollar. Of course, when you're looking at the currency pairs that house the US dollar, dollar is going to hold a lot more weight as your global business currency and world reserve currency. But stronger British pound against a weak yen, we're still going to be looking to extend this upside, correcting more of this downside move. And the stronger US PMI data just shows us that the economy is still robust enough to handle more rate hikes, tightening of financial conditions, and still leading to some dollar strength, gold bears, and gold bearish price action. So anyways, that was just a recap of the main data reports from New York and London session last night. In terms of Asian session in the evening, not much going on in terms of what impacts the trading pairs we look at. We do, of course, if for anybody who is obviously into trading AUD pairs, you do have a collection of AUD data into the Asian session and the cash rate in focus as well, expecting a 50 basis point oh, that's New Zealand after. Just saw the difference in the flag. But New Zealand also for NZD traders, you have the cash rate with expected rate hike later in the evening too. Now, in terms of data to come over our London and North American trading session, sorry, I just read a Bitcoin to $1 million. I just read it fucked me up. Anyway, so in terms of economic data to come over the London session and North American session tomorrow, we have some CPI figures. We have some CPI figures from Germany at 2 a.m. Eastern, still showing that inflation's high and elevated, and should have the markets further pricing in tightening of financial conditions by the ECB, maybe leading to a little bit of euro strength and euro USD pullback. Other than that, at 2:45 a.m. Eastern, some business climate reporting from France, which will impact euro pairs, and then business climate reporting for Germany at 4 a.m., which will also impact euro pairs, possibly bringing a little bit of strength. Against the US dollar, that's not going to hold that much weight and just lead to a pullback and dollar strength coming back into the table. During our North American trading session, we don't really have any US economic data in focus. But what's important tomorrow is at 2 p.m. Eastern, the FOMC meeting minutes. Now, this meeting minutes is more in focus and can potentially have larger market impact as we may see revisions of a more hawkish sentiment ever since we've had those inflation revisions and stronger economic data. We also had Fed speakers after the last FOMC state that the decision to raise rates by 25 was not unanimous, and a good chunk of them supported a 50 basis point rate hike as well. So with this FOMC meeting minutes, which is obviously giving us information of the last FOMC, the main thing to look for is any revisions and changes. If we see more hawkish revisions, maybe they adjust the 25 to a 50 basis point rate hike, or maybe they talk about how long they're going to hold rates up for, or more rate hikes to come, those hawkish revisions, coupled with strong US economic data and elevated inflation, can keep the stock market more bearish, gold more bearish, and dollar more bullish, give or take after the dust settles and having some liquidity grabs. So we don't have any US data in focus tomorrow in terms of like any pre-planned reports like a retail sales or anything, but we do have this important FOMC meeting minutes, which go check out my Instagram. I made a post about that last week or two as well, right? So the main thing I'm going to be looking for and what's going to show us that the meeting minutes is going to have market impact is any revisions and changes, updates, which is looking pretty high probability. And if those revisions and changes are more to the hawkish side, giving more signals of tightening financial conditions, that's going to further accelerate the dollar domination narrative, dollar buys, gold bears, stock market bears. The other things, of course, we already talked about is like Joe Biden in Ukraine and then going to Poland, the US Secretary of State visiting other countries and talking about war tensions. You have like China's diplomat in Russia and just those war tensions that are noise on the sidelines so far. All right. Anyways, that's the main focus points. Later in the week, the second half of the week, the Thursday and Friday, is where we have some of the more important US economic data, which is going to be some GDP reporting and PCE data, personal consumption expenditure. I personally think GDP is still going to be neutral to solid, might not even have that much impact, but the PCE data is still going to feed into the narrative that inflation is high and elevated and show that the Feds need to put more pressure on the inflation fight and further tighten financial conditions. But anyways, now let's do our individual technical analysis, understanding those fundamentals, correlations, and trade ideas. And let's start out with gold. So gold here has been shifting into bearish market structure ever since we peaked very key higher time frame sell side liquidity zones and also had fundamental catalysts to start shifting and having a reversal of the bullish trend. Now, the same time we've had these fundamental catalysts that support dollar domination is also the same time period we've seen stock market turn more bearish and gold turn more bullish. You can see we got a nice break of this bullish trend. We're getting a nice shift into bearish market structure with sellers printing these consecutive lower lows, and we just have these pullback phases to set up better sells before still continuing more bearish to key price points of interest. I still want to play the correlation in market sentiment confirms of less demand in equities and risk assets right now, dollar holding more strength, and the fundamental catalyst supporting that, right? You can also see, and I was talking about this with the Capital Hungry private channel, gold, whether it's trending bullish or bearish, right, can retest supply zones and demand zones multiple times before actually breaking structure or having any shift in structure. So what I mean by that is gold can easily still retest 1840s, 1860s and still be extremely bearish on the intraday time frames and higher time frames, still maintaining bearish market structure from a price point perspective. Obviously, anybody can draw trend lines and be subjective in saying you're breaking a trend line or respecting it. But trend lines are subjective. Price points are objective, right? Price points is what defines market structure being respected or broken. So let me give you an example of that. Right now on gold, you can see the main first price point of interest that's maintaining intraday bearish structure is 1845s. When we had sellers print these impulsive lower lows here, we had a pullback phase to accumulate more sell side liquidity, driving us into lower lows, extending bearish market structure, and showing us sellers in control, obviously with the fundamental catalyst stated. Area number one of interest for high risk, high reward sells and still maintaining intraday bearish structure and not seeing any chance of deeper pullback is 1845. But even getting retests into 1855, the last CPI price point, is still very bearish, but we take it level by level. The first seller interest point is 1845. Second is breaking below these lows. Third is continuing into new lows and just extending the structure, right? So bringing this information together to the table, we can line up some very, very key trade ideas, understanding market structure, order flow, and sequence of events. Number one, higher risk, higher reward sells if we do get another retest at 1848. Number two, if we just have a minor daily upper wick and start holding below 36 and 1832, continued sells to revisit these lows. Okay? Now, the only way I can take gold buys or see any potential chance of a deeper pullback to possibly retest CPI prices is if we break above 1852, which then I can see gold just performing a deeper pullback play short term, still setting up better sell orders from more demanded price points of interest by the institutions, and still continuing bearish overall. But this is my main expectation here. The adapted buys would be only above 1852, with the confirms of equities holding some strength, dollar being a little bit more bearish. Otherwise, let's just do some quick back testing and understanding of gold. You can see here, this is gold during the dollar domination phase of 2022, when we were having the markets pricing in the front loading of rate hikes and tightening of financial conditions. You can see some of these pullbacks to retest key liquidity zones on the intraday perspective, where a lot of people may just look at technicals and say, oh, a bottom's coming in. It's time for a reversal. It's time for gold to go to the moon. It's like, no, not at all. This is normal intraday behavior on this vicious beast that is gold. You can retest sell side liquidity zones and still be respecting overall bearish market structure multiple times, countless times over a period of days, weeks, and months, and still not have a shift in structure unless you have a fundamental reason for that, which we didn't get until November 2022, right? And that's not just how gold behaves when it's trending bearish. You can even see when we started shifting into bullish structure here, you could get retests of the same demand zone and support countless times on the intraday perspective and still not be breaking structure. What do I mean by that? Well, what I mean by that is a lot of retail traders and technical only traders, they try to call tops and bottoms based on support or resistance or whatever else it may be. A lot of people here start calling tops and saying a resistance is forming, or we're not going to break any higher, or we're going to get a reversal here and start to shift structure. Not understanding the fundamentals in play, not understanding how gold behaves and not doing any back testing, not understanding market conditions, volume, and volatility, right? Yes, you were getting rejections at these highs, but as long as you didn't break bullish structure, as long as you didn't shift the fundamental sentiment, gold can retest buy or sell zones multiple times and still be respecting structure. So when I'm looking at gold here currently, that's what we're seeing. I saw a lot of people on social media that when gold was printing a new low, I'll just highlight the new lows in blue, that they would start to call some bottoms and reversals coming into play, all because you didn't break those lows right away. Like you had multiple rejections and they're saying, oh, a support's being made. Multiple rejections, oh, a support's being made. But as long as you don't have a fundamental reason to shift out of the bearish market structure, you can see in these situations on the intraday perspective, we revisited these sell zones multiple times and did not break. Here, around 1880, 1, 2, 3, 4, even looked like it was going to break higher, still snapped below and still faked out the buyers and continued the sells after accumulating more sell side liquidity and trapping more buyer liquidity in the market, right? Here, new low printed, 1, 2, 3, 4, 5 retests of the same sell side liquidity zone where you finally had enough order flow to break lower, right? Here, 1, 2, 3, 4, 5, 6 retests. So it's very hard for me to go against that bias or counter trend trade unless you have a fundamental catalyst to shift out of structure or actually start shifting out of structure here. Does that make sense to everybody? Otherwise, on gold, specifically when you're back testing this pair, doing analysis, and also understanding when volume and volatility isn't the highest, you could be retesting a liquidity zone multiple times over a period of days and weeks and still be maintaining market structure. Now, let me talk about something else important here. A lot of people just draw trend lines and say, gee, look, we're breaking the trend line, so gold is bullish now. No, trend lines don't define market structure. Price points of interest do. In the example of the intraday, as long as we're still holding below 1850, gold is still in bearish market structure, whether it's breaking your trend line or not, right? For the example here, you could have drew a trend line here and did that and said, look, gold is bearish, but now we're breaking above the trend line. No, as long as gold is still holding below the 1880s price point, that's what validates market structure, not some subjective trend lines that you could draw from anywhere, right? But anyways, that's the main ideology of why I would just be looking for these trades on gold. And also why I would not see any chance of gold buys or a deeper pullback unless you're breaking above 1850s. Right? And I'm also having expectations that the FOMC meeting minutes may see some hawkish revisions. GDP data is going to be relatively solid still. And the PCE data is still going to further feed into the narrative of elevated inflation and dollar domination. So if those predictions of mine are also correct, even more reasons for gold sells, dollar buys, stock market bears. Okay, everybody? Now, before we jump into GJ, I just want to go through the dollar pairs, which is going to be a similar type of analysis to gold on GU, EURUSD, and US30, with USDCAD being the more inverse. On GBPUSD, what we have had take place on the higher time frame, and I discussed, was really just order flow being set up for the new year. We have to remember, through the primary period of 2022, we had just straight sells on GBPUSD, breaking very key historical lows. Then conveniently into the end of the fiscal year and setting up the new year, we had fundamental reasons giving us a pullback phase. A 50% correction of this overall higher time frame move, which is also conveniently creating this double top on the higher time frame, retesting that previous key broken zone. So GBPUSD and EURUSD followed a very similar sequence of events, with dollar being the inverse. And I talked about that. Make sure you guys watch the 2022 review and 2023 predictions webinar, the last higher time frame analysis. Make sure you go watch those and take notes, and any of the other recent educational webinars. It's for free on YouTube, so it's just going to give you some more information, right? It's not going to hurt. But anyways, now when I'm looking at GU, we have great confirmations to be potentially jumping back into sells. Higher time frame bearish market structure still being respected, not fully correcting this impulsive bearish move and downside play over the year of 2022, seeing a double top that's conveniently retesting historical range lows. All we need to see is dollar strength and break the neckline of this double top, and you can easily start to see us trending bearish, slow and steady, back to these low points of 1.15, 1.1. Now, this is a very similar sequence of events on EURUSD in the inverse on USDCAD, right? So bringing that information together on the intraday, you can see that this intraday double top that's been starting to get created here is not at a random price point. And if we can start to break that neckline, still respect this intraday bearish market structure and have dollar strength coming to the table, we can easily be revisiting range lows and also starting to go more bearish following dollar domination, higher time frame bias and analysis. Now, GU just failed to break that area overnight because short term we had optimistic UK PMI data, which led to this pullback on GU against a stronger dollar and a huge surge on GJ against a weaker yen. On GBPUSD, we could easily see some of these pullbacks extend up to like 1.22 before continuing sells, or just starting to flip bearish again. But I don't see the strength in GBP holding that much weight specifically against the dollar because the dollar is the world reserve currency and business currency and just holds a lot more control and weight on a global perspective. So I still want to stick to GU sales, dollar strength bias, and so forth. If we don't break below current key level right away, I would still look for high risk, high reward sells around that 1.22 price handle. Continued break below key level sells at 1.21. Safer continued sells below 1.1985. I don't really see any reason to be going against dollar strength at the moment or the current bearish market structure forming. Even though the price action is aggressive in pullbacks, we're still having sellers print these lower lows. You're still just having these pullback phases come from these lower lows, and you're still just having overall dollar strength holding a lot more weight and bearish market structure still holding a lot more weight here. Now, Euro USD, similar idea. I still want to play the dollar domination. On the higher time frame for this new year, all Euro USD was very similar to GBPUSD of revisiting key range lows, having a bit of a correction in relief compared to the strong impulsive sellers play, around a 50% correction and setting up order flow for the new year. If we cannot break above these price points, I am expecting dollar domination to come back into the scene, looking to play Euro USD shorts and bears. Euro USD PMI data was still relatively weak and not showing as much optimism as the UK side. I would still just be looking for pullback or continuation Euro USD sells from key level 1.073, medium term zone 1.07, holds below 1.0654. I can only see some adapted buys if we're breaking bearish market structure, which is being validated and maintained as long as we're holding below 1.079 and dollar still remains in bullish structure. Now, USDCAD is more of the inverse, as of course the dollar strength we want to play to our advantage for some more buys. On USDCAD, I'd be looking for pullbacks to 345, breaks above 355, and breaks above 365. We still have the Canadian dollar relatively more bearish and weak. Oil's not really seeing any major upside. Dollar individually is still holding bullish structure when you're looking at the Dixie. And of course, USD CAD respecting a very key buyer demand zone, starting to break out of this consolidation range and accumulation of buy side orders, breaking and retesting from there, also starting to create some stronger intraday bullish market structure with very nice intraday bullish price action. No real reason to sell UCAD unless you're breaking below 1.34 price handle and fading out the dollar strength. Last but not least is US 30. For those that have been following along the last market update webinars and analysis, we have been on a bearish US 30 bias as long as we hold below this very key liquidity zone, which has been turned from a buy side liquidity zone during the money pumping era into a sell side liquidity zone here, where from this price point of interest we had a pullback, we led into these lower lows. We've been retesting that same liquidity zone, failing to break higher, potentially coming down to range lows here at 32.4, and give or take having any more pullbacks, potentially starting to continue the bear market dollar domination, the market pricing in more tightening of financial conditions by the Fed, and geopolitical tension starting to rise, continuing those stock market sells. Great high risk sells we've been calling from 34.5 and 34K, and finally starting to see the break below this intraday range. Nice bearish engulfing candle on the daily time frame there. Volatility index more bullish as well. Still rejecting key liquidity zones here, and the price point of interest maintaining bearish market structure from here. When we're looking at the intraday time frames, I would primarily be looking for pullbacks to 33.5, 33.4, breaks below 33K, and breaks below 32.8 US 30 sells. Red boxes just being the sell zones I'm looking at. Correlation confirmations and sentiment confirmations include global equities turning more bearish, VIX holding the support and breaking above 22, dollar still holding strength, and dollar domination still extending there. Now, last but not least is GJ. For those of you who understand, we've been playing a GJ bullish bias for more than like a year and a half, just adapting to any of these aggressive pullback phases against the higher time frame bullish trend, as the main driving factor on GBPJPY has been the macro rate differential of a hawkish Bank of England versus a dovish Bank of Japan, having completely different mandates of what they're looking to accomplish. One being the Bank of England's trying to combat and bring down inflation. Two being the Bank of Japan's trying to increase inflation in their country. So we've been in a bullish bias, and especially ever since the 156 demand zone retests. And we finally, thanks to optimistic UK PMI data, had a break above range highs at 162, starting to create a lot stronger bullish price action with potential to be holding that yen weakness and correcting more of this downside move to the left, give or take some pullbacks that can occur. So very nice fundamentals to be bullish of the rate differential between the two countries and the currencies involved in this pair. Individual optimistic data for the British pound showing the Bank of England can tighten financial conditions further, bringing more demand into the British pound. Japanese yen still individually bearish. No geopolitical tensions are actually having market impact yet. Nice accumulation of order flow here and break to the upside. Nice break and retest above that zone. Strong bullish price action as well. Now, I don't think we're going to be getting a full retest all the way to 161 again. But if we reject below these current price points, seeing a pullback to 162.5 key level would be ideal. Otherwise, just some of the continuation buy plays from 163.2, 163.5, 163.8. So just either pullback, retest of previous highs, bullish structure buys. Like obviously it's very common to see GJ do these pullbacks if we don't break these current highs. Or just the current continuation as we are having a clean breakout out of that accumulation of order flow. A lot of volume in GJ, weakness in the yen, more optimism in GBP. So we may not even see the pullback. Instead of the pullback, we may just have a minor consolidation and just continue up more bullish, as we've already had accumulation of order flow for an extended period of time within this range. A lot of buy orders collected from these better price points of interest and had this previous accumulation there as well. Okay, everybody, so we went through key fundamental points and just a good macro review of what's going on in the markets and what's holding the most weight and why. We went through market sentiment analysis and intermarket correlation analysis individually there, looking at dollar, yen, and equities. We went through what key economic events we have in focus, both Asian session, London, and New York tomorrow, as well as later in the week. And then we went through our individual analysis across these pairs, as well as some intraday trade ideas that you could also use to scalp as well. You can always re-watch this as you wish. If you enjoy these webinars, make sure you like, subscribe, share it around on your social media, post it in other trading groups. It's free to do, really helps the channel out, especially as I'm shadow banned, and a lot of the stuff I post isn't really what the mainstream narrative wants. Whether it's about masculinity, strength, gaining more knowledge on global corrupt economics, human psychology, human nature, calling out lazy, fat, weak people. The world doesn't want that nowadays. Society and the mainstream media and the system you're born into just wants you dumb, weak, compliant, broke, and lazy, dependent on them. Getting stupider with your conveniences and access to technology, getting lazier and lazier, and losing your independence, and of course, losing what makes you human, right? So make sure you continue to be stronger, smarter, better, faster. You continue to study as much as possible, learn as much as possible, delay instant gratification, don't chase short term satisfaction, be very aware of your daily decisions that you make, be conscious of the choices that you make day in and day out, and try to be more productive. Read more, spend more time with family and friends, eat healthier and cleaner, meditate, stretch, exercise, hike. I don't give a shit. Whatever's gonna bring you some more gains long term. Fuck fat people and fuck your Bitcoin claim. Bitcoin's not going to $1 million. The Bitcoin is fully connected to the financial system. If the whole financial system collapses, so does Bitcoin, you dumb retard. How are you going to be doing withdrawals or buying into it or investing into it? You fucking retard. So fuck you and your Bitcoin claims, and I don't care about being fat phobic. Fuck fat people. Fuck retarded, low IQ people. Fuck lazy people. And go fuck yourself. All right, everybody, take care. Have a great day. Have a great week. Yeah, I was kidding.